Hey everyone, I am hashtag the tallest man in real estate. So we're recording right now, mid-January 2026, and here is our latest graphs and numbers, and things have dramatically changed. I would say starting in the fall, and I'll provide the data to actually show that. So you can see my information's here. I've been a realtor in San Francisco now for over 9 years, and actually I've been in the real estate industry for actually over 15 years now because I was in the loan industry before. So let's start off with notice the San Francisco house price trends, and this is the median house sales prices since 2012. So if you're watching this on your phone, it's a little hard to see, but in the left-hand corner, it says Q1 2012, and basically house prices then were about 670,000. So you can see since 2012 to now, so 13, 14 years later, you've had a huge increase where the average median price now is 1.8 million. And in Q4 2025, the median house sales price surged to its highest quarterly price since Q2 of 2022. It's up 12% from Q4 2024. And a lot of people are wondering if they missed a boat. You have not missed a boat. Look at what you'll see in the coming charts is you'll see that whenever San Francisco has a dip for a couple years, those following 7 to 10, 11, 12 years, you get huge increases. So we're just kicking over the business cycle. I think we're in about the third inning of this. So no, you have not missed the boat. Let's see the next chart here. So what this is showing is exactly what I was just mentioning, year-over-year appreciation rates since 1990. And if you look in the far left-hand corner, that's basically 1990 to 1996. It really didn't do much. We had some down years of a few 3 to 4%, then we had some up years of 3 to 4%. Where it really started kicking off is in 1997 when we got 11% gain. And then in 2000 is a 29% gain. Then we followed that by 7, 8, 9%. So you basically had a huge increase from pretty much 1997 to 2007, massive increases. Then you have the downturn and the foreclosure crisis in GFC of 2007, 8, 9, 10, 11. And then, that's when we start rebounding, 2012. And that's what it really feels like to me right now. If you were living in San Francisco in, 2011, 2012, 2013, there are all these new companies that started with different apps. You had Uber, you had Airbnb, Lyft, all these new companies that are really shaping the world. Facebook was coming into their own, which isn't in San Francisco, but they're in the Bay Area. And then you had this huge housing increase. And we'll see this in the next chart. So this is what I wanted to focus on here. This is the median house sales price since 1993 to present. And I like this chart a little bit more than what you're seeing before because you can actually see the graph and how it's going up and to the right. So in the early 90s, you had that recession that I mentioned. Home prices just started to increase, 97, 98. Get a big increase in 2007. Then 2007 to about 2012, it starts going down and then becomes flat. And then again, you have a big increase up into 2020, 2021, 2022. And 2022 is basically the height of all this. So if you look at this, what I really think is happening right now is we are just starting that new business cycle where we're going to go up and to the right. And again, like I said, I think we're really in the third inning of this recovery. And so would you rather buy now or wait a few years when we're in the sixth or seventh inning? Right now is about that time when we get that massive appreciation. And I've never really said this in earlier videos. I think for any buyers, it really depends on your situation. What's going on with your family, what's going on with your future and your finances. I learned those 3 F's from colleagues of mine a long time ago, and that's why people end up buying when they do. So I wouldn't try to time the market, but if you are thinking of getting in, I think this is going to be a crazy year. Springtime is going to be nuts. And you will see seasonality in the future charts here. So let's go to the next one here. So this is home sales prices selected by the different neighborhoods. And Presidio Heights had an average of 8.45 million, followed by Pacific Heights is 7.25 million, Cow Hollow is 6.5 million. And some of the highest sales there in Seacliff I thought Seacliff would be a little bit higher. It's saying the average there was 4.6 million. Now, part of that though is they don't have a lot of sales in Seacliff, but typically you will see that a little bit higher. But these are the top neighborhoods. San Francisco has over 70 different districts, and so these are those top districts. So if you're looking to buy in those areas, like a lot of people want to live in Noe Valley. Well, the average home in Noe Valley is 2.7 million. So kind of gives you an idea of what you need to be making to afford a home there. Now now we're going to be getting into condos, and as you can see, condos are a very different market than what homes are. What I always tell people is if you think of San Francisco, in terms of homes, they're never going to build another home again in San Francisco. We don't have the space for it. However, they will build other condos because we can go up. So when you do buy a home, you are buying an asset that's pretty much never going to be reproduced again. The sticky point is usually when you buy a condo, you're buying in an area that's going to have typically more bars and restaurants and fun things to do, versus the home is going to feel most likely more suburbia for those first-time home buyers. So let's take a look at the condo appreciation here. So in 2012, the average was about 560,000. It looks like somewhere in that range. Let's call it 600,000. And then you had the huge increase up to 2022 of 1.3 million. Unlike what we saw in the house sales, you are going to get more appreciation from housing, but condos didn't have that big drop off that you saw in 2007, 2008. Just because, well, actually scratch that. We're looking at 2012 up to this point, which you will see the drop off in the next chart. Because I was like, wait, why isn't there the drop off here? And so again, this just reiterates, what we're looking at for averages. Right now, your average condo is about 1.2 million. And the height was in 2022 is 1.3 million. Now, in the upper right-hand corner, this is interesting, and this surprised me when I heard this stat a few days ago. So Q4 2025 median condo sales rebounded from Q3 and was up about 4.5% year over year, which that is crazy growth. Obviously, 4 times 4.5, you're looking at about 17-18% on an annual basis. And I do remember actually talking to a colleague, a client of mine, and this was back in October. And, we were surprised that this one condo got 4 or 5 offers. No, actually, I'm sorry. No, it got 7 or 8 offers. And he's like, hey, Eric, is the market, changing? And I was like, yeah, that definitely is an indication, but we really don't know till you get to the end of that Q4. And that's what we are seeing, is that the market has changed a lot, and there's reasons why, which I'll go towards at the end of the video. So let's go to the next slide here. So these are the median condo prices year over year from 1993 to present. And so you will see not quite the spike that you get in houses, but you do see that boom going up to 2007. You get a little bit of a downturn, and then the next business cycle goes, and then it peaked out about 2021, 2022. Then we had a little bit of a downturn like we are having right now, and now we're starting that business cycle again. So those business cycles, as I mentioned, are usually about 7 to 10 years, maybe longer. And again, I think we're into like third inning of this recovery. So next slide here is the year-over-year appreciation rates. And, what I always told my buyers about this as well is what I find interesting about these stats is, as you'll notice, when we do have these little downturns, like let's say 2001 to 2003. 2001, it went down 7%, then it was 5%, 2%. Then boom, 2004, 17% increase. 2006, 16% increase. Then we had the foreclosure crisis, and you puddled around for a few years, and then boom, 2012, 15% increase, 2013, 14%, 15%, 15%. And so, as I was mentioning before, is like, with these high interest rates that were happening before, we had that downturn, we're about to hit that boom. And I think it really showed in that appreciation last quarter, year over year, was 4.5% increase. Now let's go to condo prices, median prices per neighborhood. Again, Presidio Heights, Marina, Lone Mountain, Caw Hollow, Pacific Heights. Those are the most desirable areas. In Presidio Heights, the average condo is 2.5 million. The Marina, very popular with a bunch of my friends, is 1.8 million. Lone Mountain's about the same at 1.792. Cow Hollow 1.762, and it just goes down the list. And you get down to the bottom, Soma you can get something for 725 on average. Van Ness 725. And so those are the differences that you're going to see on the condo prices there. Next slide, the San Francisco home market and coming soon. And this is what I want to talk about too, is that, people are talking about low inventory, and we are experiencing that. And that's what you'll see in the slides here. So month over month with coming soons, and let me read what it says in the upper right-hand corner. It says, as is the normal seasonal trend, the number of listings for sale on January 1st fell to its annual low count, and by far its lowest count in many years. Inventory should start to rapidly increase as the New Year's market wakes up. And, that is something I've been telling my clients for a long time, is that, in San Francisco, there is seasonality. January, February, there's not that much that hits the market. Usually after Super Bowl is when we start that spring market. So March, April, May, June, those are when you start seeing the most listings. You do have a little fall off in the summertime, and then it goes right back up until October and November, or September and October. Then November, you start to have that downturn. And that's exactly what we're seeing here. But you are seeing a downtrend in terms of new listings. I do think that'll start to take up either next year or the year after that. So it will start to increase as people start to see that these record prices are hitting the news and everyone's talking about it. And then people start thinking, okay, maybe it's a good time to sell. And I like this chart a little bit better than the last one because it really shows what we're looking at year over year in terms of annual new listings volume. So in 2018, on the far left-hand side of the chart, we had 6,186 listings. 2019 was 5,924. And then boom, the pandemic hits. 2020, 2021, 2022, we had over 7,600 listings each of those years. The peak being 2021, we had 8,646 new listings. And then we started to fall because in 2022 is when interest rates really soared. In June is when it just really fell off. In 2023, we had that low, 5,586. 2024, 5,996. Last year, 5,838. If I had to guess, we'll be above 6,000 for listings this year, but I still don't see us anywhere near those pandemic level markets when you really had a lot of new listings and a lot of more choices out there. This I find a little bit interesting, but I will give a caveat. So the annual sales for 5 million plus is the number of luxury homes since 2005 of $5 million and more. And you'll see a big increase over the last, several years. Now, I will take that with a grain of salt though. We've printed a bunch of money since 2020. And because of that, obviously home prices have skyrocketed. And I tell a lot of people this, but there is a direct correlation between home prices and the money printer. There's a lot of rumors going around this year with our debt that we're going to start printing a ton of money to pay for this debt as that starts to roll over. And so that's another reason why I think you're starting to see home prices start to take up. But when you look at this, and that's something we're seeing right now, which it says in 2025, we had 142 $5 million sales. And, we are starting to see that boom happen in AI. If you want to be in AI, you've got to be in San Francisco. There's so much happening right now. I go to these AI events, several times a month. I'm going to one actually in a few hours from now. And it's packed. We're seeing just people from all around the world starting to come in. And, you're not going to do AI in North Dakota or Texas or somewhere else. You got to be in those spaces, drawing from that top talent, going to those meetups, coming up with those greatest ideas. And honestly, that's why cities take off the way that they do. New York is the way it is because it had the best ideas. Everything came in there. The bad ideas got flushed out and the good ones stayed and built that city to what it is today. And we're starting to, we have been seeing that in San Francisco for 30 or 40 years now. So let's go to, this is percentage of listings accepting offers. And this is also speaks about the absorption rate. So let me tell you about what absorption rate is. It's the measures of buyer demand versus the supply of listings for sale. the higher the percentage, the more heated and competitive the market is. The SF market shifted dramatically in fall 2025, and the December 2025 reading was double the percentage in December 2024, 2023, and 2022. So we've had double the absorption rate than we used to. And that's why I've been telling people, and we saw it with the increase in sales, especially in condos, was up 4.5%. There's a lot of buyers out here, going back to what I was just talking about with AI. There's so many buyers out here that are moving from all around the world. And what are they going to do? They're not going to buy a house most likely unless they have families. But what they are going to do is probably get a condo. And we're starting to see, like particularly south of markets, really starting to move up there. And we weren't seeing that before. So let's go to the next slide. And this is what's fueling all of this. And I mentioned this a little bit earlier, but when you have interest rates that were 7% at its peak in basically January of 2025, now we're almost down to 6%, a full year later. That's what really, really drives home prices is interest rates, as well as particularly in San Francisco, when people are doing well in the S&P 500 or Bitcoin goes on a run, a lot of people are invested in those assets, and so as those rip, then they feel wealthier, then they're more likely to buy homes. And and that's why if we went back to the chart where I was talking about $5 million or more, we're starting to see that AI money and people that made a lot of money in the S&P. S&P has been averaging basically over 20%, I think, the last 3 years. A lot of people are getting wealthy, and they're putting that now into real estate. And one thing to keep in mind too on the mortgage interest rates. Whenever your interest rate goes down 1%, you can now afford 10% more on your home or condo. So let's say, you could afford a $2 million house before. If the interest rate stops 1%, now you can afford 2.2. And so that's why you're starting to see buyers start to flood in. And there was a chart I saw before on a previous podcast, and it was talking about when interest rates dip below 6%. And it's only happened a few times over the last several years. And when it did, all of a sudden we saw a flurry of new buyers. The old adage is don't fight the Fed. Trump's been talking about wanting to lower interest rates, since he got elected. And look what's happening. The interest rates are going down. So love them or hate them, but the interest rates are coming down, which really fuels the economy locally as well as the housing market. And then let's go back. This is what I just mentioned before. The S&P 500 has been ripping all year. As their portfolios go up, they feel wealthier, and then they're more likely to go spend it on a house. And every year the stock market usually is going to dip at some point at 10%. That's when you want some dry powder, throw that into the S&P 500, and you're going to get some great returns. And you're just, we're seeing that right now in the NASDAQ as well as the S&P. And because San Francisco and the Bay Area in general is so tech influenced, when the S&P and the NASDAQ rip, their companies are ripping, their stock portfolios internally are going a lot higher, and overall just the wealth increases, and it just keeps that cycle going. I started talking a lot in previous videos about the boom loop, and people were talking about the doom loop of San Francisco, and oh my gosh, there's homeless people everywhere, and it's crazy, and it's, whatever. We're back now. The bars and restaurants are so crowded. Homelessness is, honestly, that was a separate video. I had a viral video that went crazy about talking about homelessness. It's the best that I've seen in so long. Not saying there aren't any, of course there is, but you just walk down the streets, it's so much safer and just a lot better than it was. So that old narrative about, what San Francisco used to be, we always do this. I just show the charts. It goes up and then it goes down, and up and then down, and then down and then up, and that's how San Francisco works. So anyway, if you have any questions, reach out to me. I'm happy to talk to you. I've got partners all around the United States as well. If you have any friends that are moving, I can literally find the best agents in particular neighborhoods if they're moving to New York or Texas or LA, wherever they're going. I know a lot of great realtors, so reach out to me. Right now, too, is honestly, if you want to buy in springtime, it's going to be super competitive, as I said. Reach out to me. We'll get you in touch with the lender. You want to get pre-approved. That's the first step. And then that way you're ready when March, April, May hits and the bananas hit, you'll be well positioned to go for it. All right. Talk to you later. Bye-bye.